Hey guys, this is Wooly from SwartyPanda.com, and man, it's been a rough couple of days of the market. Today it took another huge dump. So hopefully after elections things get sorted out, and then the markets can sort of return to normal, and then hopefully after that the market can resume a nice bull market uptrend. But who knows? So today I wanted to talk about FICO and the FICO score and how they make money, well, off of us. So in 1956, let me get the names right. So Bill Fair, he was an engineer, and then Earl Isaac, he was I believe he was a mathematician. Let me see. Yep, he was a mathematician. They both met up at Stanford University, and they started the Fair Isaac and Co. Company in 1956. So they developed all these algorithms to determine the credit worthiness of people, and it's still in use today, but in different forms. If you want to learn more about the company, I'll link down to their last annual report. You want to maybe scroll down to the business section to kind of get more sense of the different products that they offer. And I wanted to let you guys know that it's kind of weird that they can basically use our financial data, kind of repackage it, and then they sell it off to different people, or different companies, I should say. And a good chunk of of their revenue stream, they use these credit algorithms, and they resell it to, or they license it to, the credit bureaus such as Experian, Equifax, TransUnion, etc. And they also sell it to, either sell or license it to other companies that make use of a credit scoring system. For example, some of the obvious ones are the banks, insurance companies, and even car dealerships. And I thought, this is kind of, it's not dirty. I mean, they're not doing anything illegal, but just something feels off, that they can just take our financial data, repackage it, and then sell it and make money off of it. But in this channel, we want to think about ways to kind of how can we make some money, get some of that money back to ourselves. And the good thing is FICO, I've mentioned it in previous videos, and I'll probably mention about them in future videos as well. But one of the ways that you can make money off of them is either just buy the stock outright, or we can do it a smarter way, and that's using the Wheel of Fortune strategy that I've also have mentioned in the past in previous videos. And if you don't know what a Wheel of Fortune strategy is, it's a way to use options instead of in conjunction with stocks. So basically what you do is you sell the put first, collect some premium. Usually you sell your put at a lower strike than what the stock is trading at, so you can get a good discount. And then it might take a couple of months to actually get assigned. I think now would be actually a good time, because leading up into election, the market's been really volatile. So people are actually willing to pay more for stock insurance. So for example, people, they might be afraid that FICO might actually, the stock price might actually drop some more, so they're willing to pay for insurance that is buying puts. And as options trader, we can actually collect that money and use it to offset any potential future stock purchase. So at the time of this video, the stock was hovering around the 400 mark, and you can probably get a nice 10% discount. So if you look at around the 360 strike, earlier in the year I was selling puts against FICO, but then I stopped because the premium started to get a little bit skimpy. But now they're starting to get really juicy again. So of course this is not financial advice, it's just what I'm doing, and I'm just sharing things that you might want to consider as well. But just to let you guys know, this is actually what I'm doing in my own accounts. So I don't want to be accused of front running or pumping and dumping or anything like that. This is just what I'm thinking, because I'm also interested in credit card companies and the whole credit card, like the scoring and just like anything personal finance related in general. And I like to share these things that might be helpful, and but not just to save money, but to also just make money as well. So I think right now could be a good, potentially a good entry point of. There are times when you sell puts a little too early and you get assigned, and you could have bought the stock actually cheaper than your strike price. But hey, these things happen. No trader is perfect. But let's say you do get assigned and you're a little bit underwater. What you can do after that is you can sell covered calls against it. So you sell. Let's say you get assigned at 360. You can actually resell a call against it, maybe at the original 400 strike. Get your money back, or even a little bit higher if the stock bounces back up again. And this is just my expectations of what's going to happen. Things will get really crazy leading up to an election. Well, then depending on what happens with the election, things could still be a little bit crazy. But I think the volatility I think the market just wants like some type of like a little bit of normalcy until like I guess like the inauguration time. I mean, we could have a situation where it might be like, I guess, what was it back in 2000, when the election was kind of held up. I think there was like the hanging Chad thing back in Florida. Hopefully, it doesn't take that long to figure out who the next president is going to be. But I expect the market to recover any losses that we've taken recently, and maybe even have a really great 2021. But these are just my guesses. Please, well, I guess you can hold me to it. Maybe later on you can go back to this video and troll me in the comments section. But speaking of comments section, I would really appreciate it if you can like and subscribe. All new YouTubers kind of go through this process where we're just trying to get our bearings and trying to give as much value through our research, and I really appreciate it. So if you could like and subscribe, that'd be great. And then I think FICO could potentially be a winner, I guess, as the economy recovers, or even if the economy is a little bit rocky. I think people are still gonna try to apply for credit. They're still gonna try to start new businesses, even during like harsh economic times. People have to survive somehow, whether they have to resort to getting credit cards to kind of survive for a few months. I think FICO could be a good middleman type of company where they'll do well regardless, because I think people will still need access to credit, either to survive or to help maybe start new businesses, etc. And that's just my thinking. And then I think in a future video I'll start talking about like their new direction, as they migrate more to like a software as a service type firm. So please stay tuned. And so yeah, thank you for watching, and I hope you do well, regardless if you follow me in this trade or not. And thank you for watching, and I'll see you in the next video. Thank you. Bye bye.